2012. It's later now than it's ever been before. All right. Hope everybody's having a nice fall evening. All right. Let's see. The first thing I want to do is remind members that we will be having a problem-solving session. Pat is in Las Vegas right now. When she gets back Monday, we will probably schedule a problem-solving session sometime next week, either Wednesday night, and I had a few requests not to do it on Saturday because people couldn't get there Saturday, but whatever is convenient. But this is a session where if you're having problems with something, like retaining your gains or pulling the trigger to get in or taking profits when you know you should be taking profits, we're going to be doing an hour, maybe a 2-hour session. So this is free for the members only. And again, we're going to go through that if the method works, which it apparently does, because there's plenty of people in the chat room that are making some good money now with candlesticks. But if you're just not getting it, it's not the system. It's that little flaw that we all have, which is our own emotions. So we will do a fix-it session on if we're having problems, what do we do to resolve it? That's exactly right. Okay, so as we can see, the rounding top is now starting to see some enthusiasm to selling them over the past couple weeks now. And I've told people before that it is more, invigorating, I guess, to be making money on the short side, because back in my good old days, I would usually be the one holding stocks as they were going down, and saying, when is this going to turn around? And then look back and say, why the heck wasn't I short? Why didn't I see that this was starting to sell off? Well, now, having the capabilities of seeing when things are starting to sell off and going short, when you're making money on the downside, that's double exhilarating because you're making good money on the downside, number one. And number two, it's opposite of what we would normally be doing, which is holding long positions in a downtrend. So right now, this market is telling us there is nothing that is making the bulls want to step in right now. So using the old adages, the trend is your friend, let the trend be your friend here, and you stay short until you see a candlestick sell signal and a close below or above the T line. I said that backwards, didn't I? See a candlestick buy signal and a close above the T line. The NASDAQ, there was that gap down telling us there was still a lot more pressure to the downside. Okay. Nothing is out there that's enticing or really making the market tank. The interest rates, as you can see, are very low. The bond prices are up and they're staying relatively flat. That's not a crucial point. Crude oil prices are down toward 85. I still think they will get down below 80. And they aren't moving anywhere, so that's not any crucial factor. Gold prices are kind of hovering in here, not moving one way or the other, but it looks like they're coming down. Took this little bounce. I'm suspecting they're going to come back down and test the 200. Silver, the same scenario, that it's probably rolling over to come back down and test Yes, dust is one of the ones that we're going to show as an example tonight of why the Doji sandwich works so well. Okay, all right, everybody getting everything. Yes, and that's the problem right now is remember, prices do not move on fundamentals. Prices move based upon the perception of fundamentals, and right now the perception is we're heading for the cliff, and until we can get some government officials to stand up and do something, everything seems to keep riding toward that cliff. Let's see, the dollar picking up a little bit of strength, but as you can see, you're right now in this T-line squeeze or crunch, heading up toward the 200. Let's see, what else we got over in the commodity world? I am short, still short soybeans. Say still short. Covered some here, and it's picking up a little bit of steam tonight. That's just great news. But as we can see, we're probably in a downtrend until we see something definitely changing that attitude. Wheat, as you can see, that's basically flat and has been that way for I don't know how long. Let's see what's happened to their. We will get the. All right, wheat's been essentially pretty much flat ever since July. Looks like it's still trying to hold this trend channel. Lean hogs. Getting a little bit toppy up here, not knowing which direction it wants to go. And cattle, this is feeder cattle's been in a downtrend. Live cattle. Starting to pick up a little bit of steam. And I can't think of what other else things out there right now. Gold, let's see, copper. Still below the T line. Orange juice, let's see, orange juice. I tried to trade that, but realized that that's so thinly traded, I was afraid to even get into it. Tried to buy it right in here, but to pay up for it was another big jump. Okay. One of the things that we will be concentrated on here over the near term is that when I got feedback, sugar is still in a downtrend. Guess we could make these back to bigger again. So as long as it stays below the T line, you're in a downtrend. I better take a gander at that tomorrow. Tomorrow's Friday already. And coffee. That. Coffee. I have lost coffee. Cocoa's all right. Coffee. What's wrong with coffee here? There we go. Must have hit. Coffee's still in a downtrend, but trying to bottom. Cocoa bouncing back up, and what would you have? And cotton also trying to get a little bottom established in here, but nothing. No, cotton maybe. Do you ever consider seasonal supply and demand? No. I look at what the charts are telling me because the charts have already built in all that information. I just want to know whether people are buying or selling based upon that information. And let's see, we didn't do corn. Corn was also trading relatively flat, but it looks like it's got this slow dumpling top setting up. Okay. I don't even know what the symbol is for platinum. Let's see. There it is, PL. That looks like it might be doing a bearish J-hook pattern. Coming down, bounce back up. Now, if I bring it back down through this level, probably wave 1, wave 2, wave 3. Then it's just because I started trading commodity years ago. I trade stocks, but I don't trade stocks on a fast basis, meaning intraday. I put stocks in portfolio positions to hold them for anywhere from 2 to 10 days. But during the day, usually I've got all my stock positions done by 10 o'clock Eastern time, and then the commodity markets start opening up. And they're going to usually be more active during the middle part of the day. Okay. All right, what we're going to be working on is one of the problems that people said they've been having is that they're not getting in fast enough, or they're getting in too late. So what that kind of implies is that everybody's not yet fully convinced that a price movement is going to occur based upon what the signals are telling us. So I come back to the very basic factor of your best friend is your doji followed by a gap up. That's why we recommended AD and C today, was because we had a doji followed by a gap up with kind of a little rounding bottom above the T line, and bought on some of the strength today based upon this little signal right here. That little signal right there is your best friend. That little signal right there, a doji followed by a gap up, is your best friend. So this market opened up sloppy this morning. Wasn't really going one way or the other, but this one opened and started moving positive. So there wasn't a whole lot of decision making. If you knew that after a doji followed by a gap up, you're in an uptrend, or you're got a high probability that you're in an uptrend. Do they sustain? Yes. You got to be kind of, I say yes. At least we know that there is supposed to be a result based upon a gap or a doji followed by a gap up. And in this case, we had a pretty big day. Would you spot under low? Now, no, not necessarily. If the philosophy is that if you see a doji with a gap up and you see more bulls stepping in and it's moving up this way, I just put my stop right back where I bought it on the open. Now, what does that do for us? First of all, if this came back down through the open, what type of signal would it be showing us? Probably a weak signal. It's telling you they've gotten back out of this position. You want to be right back out. You're out with a flat. So anticipating what should happen after specific signals allows you to make your decision immediately, knowing that you should be seeing a result from it. And if that result doesn't occur, if it comes up and then immediately sells off, you quickly get back out of it. Remember, it only takes something like 4.7 seconds to close out a position electronically. If you start seeing move up, it's just you can sleep very easily, or you can even doze at your desk during the day very easily. If you see a positive open and it's moving up, you just put your stop where it opened, because if it comes back down through there, it's not going to paint a pretty picture for you. How long do you wait to place the order? In this case, it was probably within, it opened positive and sat here for maybe about 10, 15 minutes, and then I could see it start moving, and we started putting in the order. That answer was kind of nebulous. Sometimes, if the market is opening positive and the stock is opening positive, I'll put the market order on buy on open, or on the open and go round. If the market is trading way down and the stock is trying to move up, I may give it 10, 15, 20, 30, 40 minutes to see what it's doing. So anyways, and then if the market is opening lower and the stock is opening lower, that tells you probably don't want to be in that position at all that day. Just kind of forget it. So it fluctuates based upon how the market action is and what the stock action is. But it's usually going to be within the first 45 minutes of the day. Sometimes it's going to be within the first 45 seconds of the day. Does the gap up have to occur above the T-line? No. Now, in this case, it was nicer to have it occur above the T-line, because that's just added evidence that we're still in an uptrend. But there will be situations, we'll probably run into one or two before the end of the night, where it's showing that it had a gap up below the T-line. Now, what that does is makes the T-line our first obstacle, or our first target to see what it's going to do at that level. You often say set the stop one tick below the open. Too tight? Not necessarily. If I bought here and it's starting to move up here, I'm coming back down here where it's a good distance away and put my stop down here. That's not too tight, because the price is already traded up here somewhere. What I don't want is it to trade up here, and then all of a sudden they pull the plug. Now, if this morning we said watch BONT because it was trading positive, and somebody astutely came out and said, well, what is the signal today? And I said, well, it's really not a signal. It's just kind of confirming these signals over here. So you don't want to do anything until you see what it does for till the end of the day. Well, in this case, as we can see, it came back down. So if you don't have a true signal, and here's a case scenario again, if you bought it on the open or bought it as it was coming up, it came up here, you just put your stop back down here where it opened. Because if it came back down through there, it's not providing a very good answer or a very good picture. In this case, I would have waited for resistance around 8 to be broken. Is that, well, Denise, what is that one? When you mention something, tell me which stock you're referring to. But I take it must be this one. No, it's not too conservative. Depends on how conservative you want to be. So here's the case where we've got a gap up, kind of a little doji in here. It looked more like a doji over on TCNet or Metastock. Gapped it up, had a little inverted hammer. So you have a gap up from a doji, inverted hammer. If it trades positive after an inverted hammer, what do you want to be doing? You definitely want to be buying. So you don't necessarily have to pick a spot to tell where it's breaking out. All you have to do is see what the whole pattern looks like. How about getting in with stops? You can do that too. There is nothing wrong. And as a matter of fact, I probably I don't know what percentage. I would say 40, 50% of my trades are based upon a buy stop that I'm getting in based on a price moving through a certain level, or I'm shorting something based upon it coming down through a certain level. I've heard you say wait like 45 seconds on the open to trade, and then sometimes you say 15 minutes. Why is there a difference? Again, it'd be the basis of how the market is opening, the general market. If the market is opening down hard and you see your stock moving positive, you don't have to jump right into it. It might start getting influenced by the fact that the market itself is selling off. So could wait for a little bit. On the other hand, if the market is opening up strong and your stock is opening up strong, exactly what you expected should be happening, buy it immediately. And that all comes in part of our entry and exit strategies using candlestick signals. There's easy methods for using the candlestick signals with the information built into them and anticipating what they should be doing next that gets you into good trades and keeps you out of the bad trades. And it's just all based on common sense applied to the signals. Is this too late to buy tomorrow? I would probably guess not. The reason for that is, what type of pattern is this? This is that little rounding bottom. What do we expect after a rounding bottom? Usually a good explosive price move. Let me see if I can make this. Whoops. There we go. So if you see it on a bigger scale, we've come out of kind of a big fry pan bottom, little rounding bottom. Notice where it broke out through the 50. And notice what's up here. Nothing. So this has got a lot of room to the upside without too much resistance. So if I was buying this tomorrow or recommending somebody to buy it tomorrow, I'd say you could be buying it. Just use the T-line as your stop. Does stochastic levels affect the entry signal? Yes. Now, it doesn't so much on a pattern because, remember, a pattern has a different characteristic to it versus the signal. A signal you want to buy when it's in the oversold condition and the stochastics are coming up. There are patterns that are already in effect where the stochastics are probably going to be, even in a fry pan bottom basis, you're probably going to be in the overbought condition when you're buying that one. Gap above the wick or the body. I guess that's what you're saying. Unless you've seen my body, it probably looks like a bogey. You like to see it gap up above the previous day's trading, but all you really need to do is see it trade up above or come up where you can notice that it's opening positive from the previous day's trading, which previous day's doji is going to be small trading range. Unable to trade in the first 2 hours. Okay, great. Imeda will do each individual stocks at the end. Do you ever buy pre-market? Not really, because number one, the volume is not there. Usually I'm coming in with enough volume that it's going to really affect the pre-market price. So I want to see, plus, I would say 90% of the time, the pre-market trading is going to be different than how they open it. Meaning you can see a price move around either much higher or much lower, but it's when they get the big volume there 5 minutes before the open, that's the price they're going to open it. So anything other than that really doesn't affect all that much. Would you buy at open? Yes. If the market's not pulling out of bed and I see something that's doing exactly the way it's supposed to, I'll buy it on the open. When do you decide to use the opening price as your stop versus the T-line? If we're already moved away from the T-line, that on that day. Remember, when we're first buying, what was the other ones we were looking at? If we're first buying something that's gapping up, we have expectations of what that price should do. For example, Dollar Tree today, Doji gapped up here and started trading up. Or I don't know whether it started trading up, but it gapped up. I wouldn't have wanted to see it close back below the T line. The fact that they gapped it up told you there's a lot of force here. So with that, you're going to get a little bit of profit taking. But I would, if I saw this gapping up, I'd be buying immediately. If it bobbled around, it wouldn't bother me that much, because what was the message of gapping up here? That somebody wanted to get in here very quickly and right at the right time. Hammer, Doji, spinning top, gap up through the T line, trading up. This is what I'm looking for. I'm looking for that gap up situation. I don't care whether I'm buying it at 39.10 or 39.70 or 38.40. Where is this one going to? More than likely, it's going up here to the 50-day moving average with this amount of strength. So I'm just buying it. I don't want to hang around and try to clip another 3, 10, 12, 15 cents into the trade. If I like it, I want to own it, because I don't want to miss out on it for 15 cents. And it goes up $4 without me. So if I like something, I'm going to buy it with a market order. Oops, now everybody's gone right past me. You realize we've only gotten one chart up so far, but that's all right. ADNC, T-line is 767. If you purchase near the close, 838, use the T-line as your stop, you'd lose 71 cents or 8.5%, which is quite a loss for one day. Yes, if you were trading on a 50-50 market basis. On the other side, you have to calculate, is this in an uptrend, or is this in a downtrend, or is this flat? Well, from what we know about candlestick signals, this is in an uptrend. So my probabilities might be that I've got 4 or 5 times the probabilities that we're going in this direction versus this direction. So you're not calculating the probabilities on what your loss might be. Your loss might be 71 cents. Your upside might be $3.50. So you've got to factor that into it. I'm buying this on the basis, not of what my stop loss might be. I'm buying this on the basis of what are my probabilities that this is going higher. And if my probabilities are pretty good that this is going higher, at least I know where I should put a stop loss, that if this doesn't go higher, I should be back out of the trade. But I know I've got extremely good probabilities I'm in a positive trade. Okay, ADTN. Chuck, what is the comparison you want us to make? This is still that the classic moves up. Where does it move up to? The 50. When it pulls back, where does it pull back to? The T line. Notice what they couldn't do for the last 4 days. They couldn't close it below the T line. They kept pushing it up. Now we're back to the 50, which makes this very simple. If they open this positive, now what do you have? You have a bullish move, classic profit taking at the 50, pull back to the T line, crunched back up. If it starts breaking out above the 50, you've got your classic J-hook pattern, and you can see exactly what the parameters are to get there. That they couldn't close it below the T line. Stochastics, if this opens positive, should start curling back up. You've got a J-hook. Okay, you don't see gaps in futures, so what would you look for? You don't need to trade gaps in futures. You still got plenty of other signals in gaps. Your shooting star, you've got all of them other than gaps, so you don't worry so much about gaps. You're not necessarily trading gaps. You're trading the probabilities of making money based upon what the charts are telling you. Why are stochastics important at times and unimportant at others? They are unimportant based upon what parameter you're using. If you're using just a signal, like a left-right combo, you want to see it coming out of an oversold condition. If you're seeing a pattern, you already know that your stochastics may have moved up, and they're going to be a different arrangement for that pattern in your stochastics at that same time. Don't equate buying everything based on stochastics being in the oversold area. Equate buying the signal, a candlestick buy signal with stochastics. Equate buying a pattern with a different set of standards on your stochastics. Okay, so on Dollar Tree, if you use the T line as a stop, you would have bought at the open and then stopped out. Not necessarily. I don't know what it did. I was just no. That's if I was buying Dollar Tree on the open. I'd have to be following it. And if it gapped up, I probably wouldn't have stopped out with it bobbling around, because that's what it did, is it gapped up. Now I'm looking at it on the basis that my signal's already been done. Now I'm seeing Dollar Tree as my signal, doji followed by a gap up. So if I'm buying, what's my parameters for tomorrow? It's probably buying, and already I know I'm in an uptrend. So I'm probably going to say buy on positive trading, use the T line as your stop. I mean, I wouldn't be a little bit worried if I saw it come down to the T line. A little bit, but I would still give it the benefit of the doubt that there's buyers coming in here. There may be some profit taking, but we should be in an uptrend. So you would probably only buy a stock above the T line. So you should only buy a stock. No, we'll get to where you want to buy them below the T line. For example, here's a left-right combination. I should be buying even if it's opening below the T line. The next day it failed. Same. No, we'll find some. Remember, the T line is just a parameter, a guide. It's a good guide, but the further away you move from the T line, the higher the probability it's going to move up to the T line. So if you see way down here, way away from the T line, that you see a buy signal, more than likely your next target is going to be back up to the T line. And then at that point, you can evaluate what type of signal you're getting when you get to the T line, whether it's going to go through or fail at that level and come right back out of it. Yes, use trailing stocks once I'm in a profitable overbought condition. Just very simply, I use the previous day's open as my stop. It shouldn't come back down through that level. ADNT, 50% to the 50 and 100% to fill the gap. Okay. When you set your target, is that based on a channel line? When you set your target, no, it's based on where there's a probability of that price moving to, which could be a resistance level, like the next major moving average, or a trend line, or a congestion area. There's going to be plenty of stocks that you're going to find that have excellent buy patterns, but the next resistance level may be only 4% away. There's going to be another stock that has excellent buy patterns, and the next resistance level is going to be 14% away. I'd rather take the one that has no resistance until 14%, because if I'm going to put my money out there at risk, I want to be able to get the best reward for it. Let's see, ADTN with the gap to fill up to 20. Oh, okay. But remember, it doesn't go there all in one shot. Now, if they squeeze through here, yes, that's probably your next target, but you're going to have the same analysis. Is it going to go up and do a J-hook? So that's probably the next target. But remember all the parameters or all the conditions that we need to get there. We need to have a market that's not falling out of bed. So in a good, consistent market, maybe we could get there. Or if an announcement comes and gaps it up and shows lots of strength, yes, now you've got a much better factor for getting there. Do you care about the broad market or sector? Do you care what the broad? Yes. Or just act? No. The evaluation is, what is the general market doing? Obviously, if I'm putting money in my portfolio of X number of stocks, let's say 10 stocks, and I think the market trend is up, I'm going to be more heavy in bullish stocks. Does that mean I might have 10 bullish stocks on? Sometimes, but more than likely, just to be safe, there's always going to be a bearish signal or bearish charts. So to offset some of the risk of being fully exposed to the market, I might be 7 long or 8 long with 1 or 2 shorts, just to kind of modify the risk factor. In futures, open outcry charts show gaps. Electronic charts don't have gaps. Yeah, that's true. Are you worried about the overall market conditions? No, because I'm looking at the overall market conditions. There's nothing to be worried about if you can sit here and analyze that you're in a downtrend and your positions you're predominantly short. You have nothing to worry about. So the worry goes away based upon what is the general market doing, and then how are you basing your positions against it. On Dollar Tree, what is the difference between November 23rd and today? On November 23rd, we saw that the strong buy signal was negated. I'm guessing you're November 23rd. Am I doing this right? Where is November 23rd? What is today? I'm guessing you're talking about October 23rd right in here. Nothing. Except we're buying probabilities. The probability to see a left-right combo followed by a gap up tells us we got a very strong probability we're in an uptrend. Except the next day we're told we're getting a bearish engulfing and they can't get back up above the T line. That's not what we wanted. We're out of that trade. So investing with candlesticks isn't finding the signals that are going to produce the big potential for you. It's finding these signals that are going to provide the big potential for you and know what to do with it once you have it. Because not every trade is going to work. You got to know when to get back out of a trade and go on to the next one, or whether one is working and you ride with it. So part of the candlestick trading is knowing when to let your profits run and cutting your losses short. And that's exactly what candlestick signals do for me anyways. If I was buying this one sometime that day and the next day I saw a bearish engulfing, there's only one thing I'd want it to be doing the next day to stay in it. It better open positive and trade above the T line. If it didn't, I'm back out of the trade because there's something wrong. This is not the strength we anticipated. I want to be holding onto something once it gets to the T line. It better get through very quickly. Okay, let's see. Whoops, did I miss some up here? I'm trying to, you realize we're on chart number 2 out of 40 or 50. So you might as well get the coffee brewing. Yeah, they work the same on indexes. Remember, candlestick signals are the cumulative knowledge of everybody buying and selling whatever trading entity during a specific time frame. They work on everything, whether it's an index, whether it's tulip bulbs, anything that has fear and greed built into it, based upon investor sentiment, you're going to be able to analyze it. I know daily sell signal is below the T line, but where do you put the intraday stop? There are times where you've got to decide. Let me see. For example, let's take this one. It looked like a flutter kicker setting up. It opens positive the next day. You're buying. Where should this not come back to? It shouldn't come back down through the T line on this type of situation. It should be going positive. So on something where you know is a very strong signal should be going this way, comes back this way, you put your sell stop. Or at worst, you put it down here. It should not be coming all the way back to the trading range of the previous day. So it all still boils down to common sense. Where is the level? If I was buying now tomorrow, now the T line would probably, let's say, at that point be up close to the open of today. If I was buying tomorrow and it came back down through the open and the T line, I'd probably close it out. What's the worst that could happen? It could come down and then come back up. I can always buy it as it's coming back up through the T line, because that at least tells me which direction it's going at the time I'm buying and what type of signal it will probably produce by the end of the day. When in a downtrend, is the overall market and doji, and a doji hits, you should definitely be light on your feet. Yeah, if you know you're in a downtrend and you're buying, whatever that reaction to that buy should be sustained. If you start seeing them weaken, you just get back out of the trade. You can't short IRAs, so do you wait for buy signals on inverse? Yes, you can buy the ETFs. Of the reverse ETFs. You seem to favor the Dow when evaluating the market. Isn't the S&P a broader? Yes, but if you know what the Dow's doing, you pretty much know what the S&P is doing. So you don't have to, I mean, you're not trying to evaluate exactly what's happening in the indexes. The Dow will tell you what's going on. The S&P will tell you what's going on. I can pretty much guesstimate somewhere that if the Dow's doing this, I don't have to really look that hard to know that the S&P is probably doing that. Now, the S&P and the Dow kind of work side by side. The NASDAQ and the Russell work side by side. So there will be times when a market trend is going on that the Dow is down and the NASDAQ is up. That basically tells you there's really no change of investor sentiment. It's just shifting of funds. So what you can evaluate out of that situation is that your trend is still in progress. Okay. When you get to the T line, you need to get out through it quickly. Q-Core, when you get to the T line, you need to get out through it quickly. Let's see, Chuck got all that. Yeah, I should have. I've got most of the Q-Core trade pared down, which means I can still buy it if something happens. Let's see. 11.2 looked perfect buy condition with a gap up. Buy on open. How would you have prevented from losing money on that day? On which one, LM? I know we're talking a few, but okay. All right. Not necessarily, Jim. My problem is watching all of these when you get stopped up. Do you put in a buy stops in case the stock reverses and goes in the direction you thought it should? Not immediately. If I get stopped out, that's because I did something wrong or I analyzed something wrong or the market's not going in the direction it should be. So now, if I'm watching a stock, let's take, for example, Dollar Tree. If I'm watching a stock that tells me this is probably a very strong buy, we should be in an uptrend, and the next day it opens here, and I get stopped out here, and it comes down here and then stops and starts moving back up, I'm already inclined to think we're in a real strong buy, that somebody's in there taking or getting out of the position, that it might start moving back up. Now, this is because it's just starting, and it's starting with a strong trend. I won't throw this off my chart. I'll watch to see, all right, I got stopped out. If it closes down here, I'm thinking, all right, I'm glad I got stopped out. If it gets down here and I start seeing it come back up again, what's the first thing I'm thinking? Say, man, I got stopped out, but now it's coming back up to where I got stopped out. What type of signal is this producing? Well, if it's coming back up and producing a hammer type signal, we're just coming out of a strong move. I want to be back in, because that tells me something happened where there's still some sellers and it's come back. So each trade is got to be watched, as far as the reason you got in the first place was because of a strong buy signal. All right, let's crank up here a little bit. Let's see. We did the two. Here's another nice one. Nice rounding bottom. This is LXK, Lexmark. Where's our next potential upside? Coming out of a fry pan bottom. We had an inverted hammer and it went positive. That stochastic's coming up. This has got all the makings of heading up to the 200. SPLK. Now, some of these aren't my pickings. Some of these came from the chat rooms today. Do I scale into a position? Sometimes. I don't want to spend a whole lot of time positioning. I want to either be in a position or out of a position, because then I want to be analyzed what to do with it from there. So sometimes, if I'm not sure, let's say it gapped up a lot after a signal that I thought it should gap or should show strength, I might just say, I'm going to buy a half a position here, because if it backs off, I might not want to be in this until the profit taking is over. Or if it continues higher, then I'll buy the other half a position. But I would say that 80% of the time when I buy a position, it's all in one chunk. SPLK, inverted hammer, doji. Notice all the indecisive trading here, and then we have a positive open. The inverted hammer with a positive open is probably one of your strongest high probability bullish trades. SLCA. So this one can be bought on positive trading tomorrow. That was a good looking chart. This one's also a good looking chart. Notice what we had a few days ago. This huge hammer signal, another hammer signal. Notice every time they knock it down, they take it back up. Now they've taken it back up through the T-line. Now you're starting to look at it. If this opens positive, what type of pattern? You're going to get a J-hook pattern. J-hook pattern is going to have stochastics where it didn't come back all the way and starts curling back up again. What did you say about the inverted hammer on SPLK? That the inverted hammer is one of the highest probabilities that if you see it open positive after an inverted hammer, one of the highest probabilities that you're going to be in a positive trade. SLCA. If I was buying this one tomorrow on positive trading, I'd just merely use the T-line as my stop. It shouldn't close back below there. All right, we'll get to the individual ones, Ben, when I tell Jim to do the double line. We've still got a bunch here. Here's what I want to show people about the kind of the power of... Who wrote this one? Son of a gun. That's just great when you can't even read your own handwriting. SM, I know that's not going to be it. Well, pshaw. I have one here that's something ISM. And I can't figure out what it is. So we'll go to... I don't think it was ISIL. It was... INSM. That may be it. That's it. All right. Notice this chart. Nice fry pan bottom. Now we're starting to break out. Notice how they broke out with a big candle. Nice looking chart. Look at this chart. Nice fry pan bottom, staying above the T line, still moving up slowly. Whoops. This one, EDU. Nice fry pan bottom, nice breakout to the upside. Potential up here is still probably the 200-day moving average. And SRPT. Fry pan bottom setup. They can't get it below the T line. I think there was one more. Maybe, oh, okay. PCS. Fry pan bottom. Now, what's the one characteristic that you see about these fry pan bottoms? You're seeing positive trading in a market that looks like this. This is why I keep trying to stress to people that if you find a pattern, that means there's something going on in investor sentiment in that to develop that specific pattern. Those were all fry pan bottoms that were moving up like this at the same time the markets were just getting walloped. It doesn't matter whether SRPT is in a volatility squeeze. We don't give a hoot why something is moving up. This fry pan bottom has got its own unique characteristic to it. And from here to here was at the same time you're looking at a market that was going from here to here. So if you've got the option or the choice of either trade the pattern or just trade an uptrending stock, take the pattern. There's so many more benefits of trading the pattern because it's got less downside risk, number one. And number two, in an uptrending situation, a candlestick price pattern will produce much more huge, let's see, that's kind of redundant, much bigger gains for the time frame than just an uptrending stock because the power is already built into that pattern that we already recognize. Anyways, that's the point for patterns. All right, here's some good-looking charts that we'll get to here real quick. Let's see, what is that? I can even DV S dot BD. This one's got little doji gap up. This is a case where notice where we close, right here at the T line, with a good, strong pattern setup. Makes this very easy. If it opens positive, you want to buy immediately because what's that telling you? They're still moving positive off a nice pattern, and the T line's not going to be acting as resistance. GME. Nice little scoop type pattern. Notice where you can visually see right off the 50 is a nice Morningstar signal. Now here's that case where would we be buying? Let's say it was trading up here and we bought and it came all the way back down here. Because I've got a Morningstar signal, I'm going to give it to the end of the day to see whether they're going to bring it back up. If they closed it back down here, that did two things. That failed the Morningstar signal, which was a signal that told me the bulls were taking control. And two, they closed it back below the T line, which I want to be out of it. Plus, this whole pattern would look different. This would be now kind of a downtrend versus what we're seeing right now, which is a kind of a J-hook scoop type pattern. Jay, we'll get to the individual stocks. Here, let me just get through the ones that I've got examples that I can remember why I have them up here. Another one. All right. For those of you, you've got a downtrend, a dark candle. What do we got a setup for right now? All right, what type of setup do we have? There you go. Thank you, Van. If this opens positive, you want to be buying immediately. Because what do we know about a doji? We know that if it opens positive after a doji, it's going to move in the direction of how they open it. If they open this positive and it moves positive, you got a flutter kicker, exactly. Now, what's the advantage of a flutter kicker compared to a kicker? Well, kicker, this would have been considered a kicker if this closed way up here, but you'd been chasing it to get into it, which I don't mind doing. If I see a kicker signal, I want to buy it because I know the result is going to be a lot higher. But a flutter kicker gives us one little bit more advantage. We know that if this opens positive tomorrow, we've got a good possibility of a flutter kicker setting up. So we don't have to be rushing around trying to find funds or close out another position or do something to fit this into our portfolio. We've got a whole evening to think, all right, I'm going to sell XYZ. If this opens positive tomorrow, I want to buy it. Because if it goes positive and I have a green candle, if you took out this doji, you'd basically have a kicker signal, which is just as strong. A flutter kicker is just as strong as a kicker signal. It just gives you the opportunity to set up for it and get ready to buy on a positive open. We did PSMYGN. Another one is setting up a J-hook. There's your double doji. Strong move, doji, and they open up positive. You want to be buying immediately. That tells you after the strong move, they're consolidating, but they're not consolidating with any great selling force. And bam, they take it up again. Now you got some profit taking. There's that inverted hammer. They open up positive. You're going to go positive. Even if it's a 45 degree, it's going to be relative, what do I say? 45 degree is going to give you that J-hook pattern setup. Even though the bears took it down below opening, LM, let's see. Does it have to be for SZYM? Does it have to be above? No, in this case, this happened to be gap up above the T line. Had this been way down here and the same signal occurred, where was our first target? Back up to the T line. Let's see. Oh, no. The T line. This black line is the T line. 200 simple moving average, 50-day moving simple moving average, and the 20-day simple moving average. Those are what money managers use. Then the black line is your 8 exponential moving average, the T line. Let's see. We did PCS. Another one that, notice how it's got kind of this little doji sandwich in here. Very simple. You open it. If it opens positive, you want to be buying. Just watch what it does when it gets to the 50, and you know where your stop is, right here on the T line. No dumb questions in here, Jim. Any question that somebody asks in here, I have probably asked many times myself. So, let's see. But what is the question? But these signals are formed as a result of earnings are better or worse than other signals. Neither. Remember, these signals are the result of the cumulative knowledge of everybody buying and selling. If you see a chart, the advantage we have with candlestick signals, if you see a chart that has somebody says they've got fantastic earnings and immediately the stock goes down, we could read into that what that meant. That meant that stock already had those earnings built into it. People were taking profits. If we see terrible earnings where they've missed or they're $2 negative and the stock skyrockets, that's because the analysts must have been thinking they were going to be $4 negative. So I don't try to guess or estimate what a stock is going to do based on parameters. I just want to watch to see what everybody else is doing once they see what those parameters are. Do you look for a minimum of a 3-to-1 risk reward? Not necessarily. I'm looking for stock situations that when I put it on, I've got the possibility of making at least a 10% return. Do you play earnings? No, I just play the stocks. See, remember, the stock is going to still develop a pattern based upon what everybody's doing before the earnings. And when they're buying before the earnings, it's because they are buying and they know the earnings are coming out. If they're selling before the earnings, that's because they know the earnings are coming out, and that's what they're doing. So I may not know what's going on with each company as far as what their earnings are doing, but I know the smart money is, and that's going to reflect in the charts. So anyways, this one right here, PCS, good strong buy. Now this is what we call the doji sandwich, which is a very high probability trade, which is you see a bullish candle and then a doji. The next day they're going to move it, and how they open it after a doji, you're usually going to have a day that's equivalent to about the day or the size of the candle the previous day. If you see this occurring right on the T line, it makes it very simple. If they're opening a positive, that means the T line is not going to act as resistance anymore. That much more probability that you're going to be in a good trade. Here's one with a bullish Harami telling us the selling has stopped. Now, if you're buying this on a positive open tomorrow, where's our first target? We've moved a good distance or a decent distance away from the T line. It's probably going to be the T line. Worst case scenario is you buy on a positive open, it comes up here to the T line and starts backing off. You can always get out sometime knowing that it's failed the T line, but you may still get out with a little bit of a profit and go on to the next one. And NAT. There's that little morning star signal at the bottom of the trend, double bottom, closed above the T line, makes it very simple. If you open up positive tomorrow, it's confirming the morning star signal, and it's showing you the T line is not going to be a factor. KD, let me get to there. Let's see. I don't know whether I've got WPRT on here. I think I do. This one should have been closed out today. Why? Because we have a bearish engulfing signal, closed right on the T line, and closed back below the T line today. Anytime you close below the T line, you want to be out of the position. Because every time it closes below the T line, there's the probability of something drastically bad. What was the one that we got out of yesterday that everybody was happy we were out of? But as soon as you close below the T line, well, I guess even this one right here with a close back below the T line, that means there's probably higher probabilities that negative things are going to be announced. This is a bearish J-hook pattern. That's going to be a good short tomorrow if it opens weaker. Was it Monster? Monster closed below the T line. Came back up today, but it opened pretty soft. And KIR also closed below the T line. Even though they tried to take it back up today, this one is still showing you can be shorting this one. They're probably taking it back down to test the lows. Do you wait to the end of the day for the T line? Again, it all depends on what you can see the market doing. If the market is cratering and you can see everything coming down through the T line and you know that it's not going to come back up because the market's not going to come back up, you get out at the T line. What's the worst case scenario? It goes down and comes back up through the T line. You can always buy it right back again. Okay, another thing about candlestick signals is that the bigger the signal is, the more compelling that your reversals occurred. Nice big bullish engulfing signal on NOW. Highway. HWAY. HWAY. Look more like a bullish engulfing signal, but notice what it's bounced off. A big signal after a bounce off the 200. More than likely you're in an uptrend. The bigger the signal is, the higher the probability your trend reversal is going to be. Big piercing signal. Probably you want to be buying this one immediately. Dust was one. Let's see. Let me check one more over here with a big signal to it. Oh, there's the next one. Big hammer, harami type signal. Notice how far away you are from the T line. So you can calculate. If I bought on positive trading tomorrow, it's going to come up here. I can make at least 4.5% just to see if it's going to fail or go through the T line. If it fails the T line and I have to get out of a bad trade, maybe I've still made 3%, 4% on the trade. Now, Dust had a perfect buy situation. Notice what we had right here. Kind of lie right along this trend channel. We had a doji. Stochastics heading up. Bullish engulfing signal. What do we know about a doji? Well, first of all, looks like we have a doji sandwich. A good strong day. A doji. What do we anticipate from a doji? That if it opens positive, it's going to go positive, or it's going to move in the direction of how they open it. So if they open this positive after a doji, we've got two things that are going to occur. Three things. We know it's going to go positive just because it's a doji opening positive after doji, number one. Number two, we've got the potential of a doji sandwich, which means we've got at least this type of price move up here. And number three, if they move this positive, where is it? What's it doing? It's breaking out through this territory. So anytime I see a doji right on a resistance level, I'm waiting to see what they do with it the next day. Did your Dust hit a sell stop? All right. Okay, so that was the point of the Dust, was telling you if you can see a doji right on a resistance level, and you can add as many factors as you can for a positive trade, such as opening positive, breaking out, doing a doji sandwich. The more you put it into it, the higher the probability you're going to make money with that trade. Dust, today's candle is so far above T-line. Would you expect some profit taking and a pullback to the T-line tomorrow? Yes. So if that were the case, then I'd be going to my 5-minute chart and 10-minute. If this opened positive tomorrow, I'd be immediately going to my 5-minute chart to see what they were doing with it. If they continue to take it up, still ride with the 5-minute chart until you see them start rolling it over. Then you take some profits. If they open this lower tomorrow and start trading it down, I'd probably take profits immediately. Tells me they're probably going to do some sort of bearish harami. Let's see, GDP. I know I've got you all overtime tonight. We're already 10 after 9. Let's see, it's up to you all. Do you want to keep going, or we want to cut it off here and I can take some okay, you're allowed to stay up late tonight? All right. All right, we'll keep cranking out then. Here's a bullish harami. What's the strongest of your bullish haramis? Is a doji. A doji in any signal. Notice where people sell. They panic sell in the oversold area. That's when you start seeing these big signals down here, a big candle. If I was short this, today I'd have half the position off. Why is that? Because it can still go down further? Yes, but we're in an oversold condition with a bullish harami doji, which theoretically tells us that the selling has stopped. If it keeps going, I can at least sleep with the idea that I'm still making money on half the position after making good money on the whole position in a high-risk situation. I'm in an oversold area, and it's still going down. Now, these are the nice trades for making big money to the downside. It's kind of these that are rolling over, and they can't get back up above the T-line. This is where a candlestick signal and a gap down is going to make you lots of money. Just that left-right combo, which is a powerful sell signal. Look at that, left-right combo right there, left-right combo right there. They can't get this back up above the T-line. Then they gap it down. Notice your percentage move. You would have made 35% in 7 days to the downside. So can you buy? You can buy with the idea. Now, if it opens positive, what's the rule of a doji, especially a doji harami? If it opens positive, it should be moving positive. So this makes it very simple. What's your stop loss? If this opens here, where's your stop loss on this? Yeah, the open of, let's say the open of the previous days. If it opens here, it shouldn't come back through here, because if this bullish signal says if it opens positive, they should be moving positive. They shouldn't be able to bring it back down through here. So this is, again, part of that common sense aspect that if this is what it's supposed to do on a positive open, it shouldn't do this. Get out of the trade immediately. Okay. Just real quick, the REITs all had a good day today. There's a piercing signal on IRV. I forget which other ones. There's a big bullish engulfing signal on AGNC. I forget, what did Nally do? Nally kind of had a piercing signal, so there's lots of the REITs started to pick up strength again. All right, let's do a few of the shorts, because this is where we've been making our money. Again, back to the question, does this market worry me? Absolutely not. Not when you can see when the sell signals are and the market's going down, when it's time to be short. I've been short STX for quite a while, from this point down into, I think we covered it right here on this day. Where do most people sell? They panic sell at the bottom. Right on a major support level, that was a perfect time to take profits. Get bounced back up, did a bearish harami right at the resistance level. And I say resistance level, the 50-day moving average, and you can pretty much draw a line right down through the tops here. That tells, I mean, this is, observe the obvious. You're in a downtrend, and every time they take it up and hit a resistance level, they're selling it off. Where are they likely to sell it off to? Probably right back down here to the bottom of the downtrend. Now, notice what we've got here. Excellent place for going short, even though you're had a big downtrend. If it opens lower tomorrow, what type of signal are you going to have? Anybody? Just let me know you're awake out there. If it opens lower tomorrow, what type of signal? There you go, a doji sandwich, which means we've got the potential of having another big day to the downside. Another big day to the downside might bring us all the way down to the bottom of this trend channel. So I say this because some people they're saying the problem is they don't react fast enough. If this opens lower tomorrow, you don't have to react. You should already be set to say, if this opens lower, I'm shorting immediately. I expect it to go this way. If it opens lower, I'll give it a couple minutes. It shouldn't trade up above this level, or they're taking a positive. So that's where my first stop would be. But what I'd really like to see if them open it lower and start immediately taking it down. Now, that'll also be a function of if we wake up tomorrow and the pre-market futures and the indexes are down, we know this is probably a good time to go short on this one. ENOC, another one that we recommended going short on based upon, there was a doji gap down through the T-line. That's kind of telling us they've rolled over. We shorted it this morning on weakness. Why? Because if they couldn't hold the 50, they're heading for someplace else. If it's not this level, with stochastics telling us there's more downside, the next target is down here at the 200. Lots of good price move or percentage move. CLGX, slowly rolling over. Had a little positive day today. So this is one that you watch. Not really a signal. So if they open this lower tomorrow, you want to short immediately because it tells you what's happening. They're taking it down, probably down to the 200. And SIX. Has nothing to do with what I'm looking for. SIX. Same scenario right here. And notice what we've got right here, Doji. If they open this lower, what's that tell us? They're going to move it in the direction of how they open it. And if they open this one lower, it tells me they're going to start sagging this pretty quick. Stan, if you turn on any of the stations, I usually have CNBC on TV, but I have it on mute. Up on the top or the bottom where they're scrolling things, they'll show you what's going on in the pre-market futures. We shorted KBH because all the home stocks were starting to roll over. That's exactly what they were doing. Again, there's that Doji sandwich. It didn't have that price move the first day, but in 2 days it's had that same price move. So it's still a decent percentage, with still more capability of heading down to the 200-day moving average. We also shorted Ever. This is a perfect situation where it opened here. We have a left-right combo that closed below the T-line. If it opened lower the next day, which it did, but it immediately started trading up, which makes this very easy. You just put a sell stop 1 tick below where it opened, because if it came back down through there, the bears were still in control, which is exactly what this chart is telling us, that the bears are in control. This is what I call a scary day. And it's because I used to do this. I would short something, and over 3 days, I've got a good profit. Then somebody like Prestine or somebody would come out and say, if this one trades below a certain level, you want to buy it. And they'd pop it right back up, and I'd think, man, 3 days, and I've given back all my profits in one afternoon. Then I'd watch the majority of the time. They'd bring it right back down, because that's what the chart was telling me, that the force was already moving in this direction. VC. Doji. Shooting star. Very simple. If this opens lower tomorrow, you want to be shorting it. That's right. The force is with you. And GRFS. There's your bearish belt hold. Took it up and brought it right back down. What do you think they're going to do with this? They open this lower, they're taking this one down, and they're probably not going to support it here on the 50. That means the 200 could be your next likely target. Okay, who wrote this one? All right, THC. There's that Doji sandwich setup. If this opens lower, start looking for a big drop. Now, where do most people sell? They start selling at the bottom. Where do you think the big price moves are going to occur? When your stochastics are already down here in the oversold area. So if I was short, that's the Russell 2000. Let's go back to the THC. This one. Okay. Still that Doji. If it opens weaker tomorrow, where do you think the target's going to be? Right down here, because that candle right there would be about the same magnitude as that candle right there. So for day traders, these are the easiest ones to use, or to make a profit on day trades. That if they open lower, you know they're going to move in the direction how they open it after a doji. And if it's got a big candle doji, watch for the next big candle on the downside. Hold on. We're getting close here. There's that rollover, gap down. Notice where gap down, right on this level. If it opens lower, where do you think your support is? So this one's another simple one. If it opens weaker, remember, this gap down told you something. Somebody's wanting to get out of this stock very fast. WHR. That's a perfect rollover. Anytime you see there's a left-right combo with a booster to it, that tells you they're going to force it that way pretty hard. And ELLI just can't get back up above the T line. There's your target on this one. Yes, you've been clicking, Carlos. Oh, mercy sakes. All right, so that's, again, this all kind of, I put this kind of potpourri in here tonight to, again, take advantage of the direction of the market and take advantage of the big price move potentials. Again, there's lots of stocks that are short that we're making tons of money with, and there's stocks that if you're long, you're making money even in the down market, or at least it's holding its own. ADNC. ADNC is just, again, just the result of what we know should be happening after specific signals. DLTR, there's nothing wrong with this one. It should be buying on positive trading. You got to remember, something happened, I'm guessing it's earnings, that did this. So this was the result despite what the market was doing. David, I use a bunch of chart services. Right now I'm writing formulas for Metastock to find the high profit trades using Metastock charting. I use TCNet also for scanning. Ninja Trader. A lot of the charts that you see up here tonight, this is CQG, which is the reason I use them is it's usually got good graphics. Thinkorswim has good charts right next to the trading that you're doing. So, anyways, and it doesn't matter. It's just as long as your chart service is giving you information at the same speed that it's giving everybody else information, so you're not 4 seconds behind. That's all that's important. You just want to find something that graphically looks good for you. Okay, is there any questions we can do on candlesticks? Eddie, this happens Thursday nights. This is open to everybody. If you're a member of the Candlestick Forum, we do the same thing on a Monday night. We go through which sectors are acting well, which signals are acting well. And then also we've got a chat room going all day long where we've got about 150 to 170 people in there each day at all levels of learning. And that's the whole purpose of the chat room, is that there's some people that are in there very not sophisticated. They've now gotten it down how to make money with candlesticks. And people that are learning can come in there, see what they're doing, number one, or number two, ask questions on what they're learning so you can kind of speed up your learning process. During the month, I used to sell a lot of our material, and it's still for sale. But for members, what we do is we'll take a specific night and use that night for entry and exit strategies, how to refine your entry strategies to be in good positions and keep out of the bad ones, or how to take profits when it's time to take profits, how to do your scanning for the best trades each day. So those topics we'll do as a training session, and those are all free for members. And so December, we're going to be pretty heavy on that stuff because usually we have 3 or 4 guest speakers during the month, like John Bollinger or some of the option trading people, to give their perspectives or their products so people can see what else is out there, because I'm a firm believer that not one trading method will be good for everybody. Sometimes you need 2 or 3 trading methods to kind of combine them to make them a good trading method for yourself. Now, I'm also a very strong advocate that after seeing everybody's trading session or material, that I would still put candlesticks head and shoulders above the rest of them. But that doesn't stop you from taking good parts of somebody's trading program and adding candlesticks to it and making it even better. Okay, Joe, we will start the individual ones. Do you do a session on candlesticks and options? Yes. Unfortunately, because of the amount of information, we're going to start breaking them down to where there may be an hour and a half session on how to do put spreads or sell call spreads or vice versa. And how to do credit spreads versus debit spreads. So that we've been doing them where we did do a whole weekend in options, but it's found out that it's such an overload for most people that if we break it down into smaller sections, that you do it as kind of a training unit where you might have 5 or 6 training sessions on options. Okay, Jim, go ahead and do the double line, and in 10 seconds, do the next double line. Okay, I see that Apple is one of the ones that everybody wants to see. Apple, you just stay short until you see a buy signal and a close above the T line. Here's the case where in this downtrend you see it did close up above the T line. The next day you needed confirmation, which it didn't do. It came right back down over the last couple of days. Do Netflix. Netflix, let's get this on a much smaller chart. Notice the squeeze in here. Notice that once they did this big move, you're in a 45 degree, and they've pushed you right up through the 200-day moving average. So this one should be breaking out. Now, this is the advantage we have with candlestick signals. If they start failing here, doing a sell signal, like a bearish engulfing signal, that's telling you exactly what's happening at that level. Let's see, all right. Okay, Jim, I hope you've done the second double line. All right, we're going to have to go through these relatively quickly, but I'll try to be as thorough as possible. FLT, this one you just continue to hold as long as it stays above the T line. I wouldn't be buying it here, but I wouldn't be selling it here. I'd be just holding it. JCPenney, that did not do right. JCPenney, this one you stay short. Notice the sell signal, and they could never get it back up above, and now look what's happening. They're slamming it. But now, after they've slammed it, we're down here in the oversold area. Notice how the candles are getting smaller and smaller. Also, notice how far away you are from the T line. So any positive trading or positive signal, you want to be a buyer because you know at least your first pop should be back up to the T line. That might be a 15% move just to show you whether you're right or wrong. And if you're wrong, you're out with 10-12% profit. LEN, Lenore, this one's another, Doji sandwich. If this one opens lower tomorrow, you want to be shorting it immediately. See the Doji sandwich right here. It's big down day, Doji. They opened a little bit positive, makes this entry very simple. Stochastics are heading down. All you had to do is put your sell stop one tick below the open of the Doji. If they came down through there, you're starting another dark candle. Same scenario. If they open it positive tomorrow, I wouldn't be buying it until probably I saw bullish confirmation. However, if they started selling it and it came back down through the Doji, I'd be shorting it because I'd suspect another move like that move on the way down. Zaza, a double Doji. This one should open positive tomorrow. If it does, you can be buying because they'll take it right up to the 50 very quickly. Still a hold. Facebook. Facebook is on its way up. Also a Doji sandwich situation. If it opens positive, you can jump in it because it could move right back up to this resistance level, which would be the equivalent to this candle here. But then you'd have to be very diligent because, as you can see, you're stuck in a sideways channel right now. It needs to break out of that level. So Again, the advantage will be to see what type of signal you see when it gets up to that level. This one, not so attractive. Got a spinning top. I would suspect they're going to bring it back down and see if they can bounce it off the support on the 50 before moving it back up. PPHM. Ew. Do this. Well, that didn't do any good. You can be buying this one on positive trading. You got a left-right combo. Just don't let it, if it opens positive, don't let it close back below the T-line. That's really going to goof up our charts. Zip, the classic, bounced up to the 50, pulled back to the T-line. You can be buying on positive trading, but I'd be more aggressive buying if it came back up through the 50. DMND, if this opens lower tomorrow, you want to be shorting it immediately. Anytime you see that major gap down, if they open it weaker, they're still selling it, and we'll be selling it for a while. AIG, there's a big sell signal. Can't get it above the T-line. Now you have a bullish Harami. So again, they'll be moving in the direction how they open it tomorrow. If I was short, if it came back up through the high, which would also be coming up through the 200, I would probably cover the position. Now, does that mean it's gotten up through the T-line? Not necessarily, but if it gets up here, if it has enough strength to get up here to the T-line after a bullish Harami, that's giving me an indication the bulls might be stepping in. Worst case scenario would be it comes up to the T-line, fails, and starts back down. I can always re-short it. Sorry, you can't short this one because it's below $5, but I would be out of it. And ONXX, whoops, S.ONXX, S.ONXX. This one you stay short ever since your morning star or evening star signal. Notice you can't get above the T-line. You're probably trying to, but you stay short until you see a confirmed buy signal and a close above the T-line. RRD. This one, if you're short, you probably should have been out today. Nah, close right on the T-line. Got a good profit in it. If it opens positive tomorrow, you close out the position. If it opens lower, you stay in, but you put your buy stop right back up here where it closed today. Let's see. Do just a couple of these. The diamonds obviously are still in the same move to the downside. Qs, same scenario as the NASDAQ. We're still heading down. Let's see. IBM, stay short. Again, there's that gap down. You're in a downtrend. Stay short until you see a very strong buy signal. TZA. This one you stay long. Notice how it used the 200 today as support. Another one that if it opens positive tomorrow, you've got a potential of a doji sandwich setting up another strong up day. And Sherwin-Williams. Nothing that I'd get excited about. If I make this smaller, you're going to pretty much see that you're in a sideways mode. I would be trading something else. VWO. Vanguard, this one you stay short until you see a buy signal. Again, there's that kicker type signal to the downside that started this downtrend that broke down through this wedge pattern. That tells me there's still more downside. We did TZA, APPY. Another one that if it opens weaker, you can't. This is below $2. If you own this, if it opens weaker tomorrow, close out the position immediately. We did SLCA, Groupon. Groupon looks like it's trying to do some sort of a J or a scoop pattern. If it comes back up through the T-line, I'd be a buyer, but not until then. Trox. Another one that's doing kind of a morning star signal. This one you can be buying based on the fact that if it moved up to the T-line, it's still giving you about an 8 or 9% move to get there, just to see if you're going to break through or not. Ross Stores, hammer at the bottom. This one you have to watch. If they open this one positive tomorrow, if you're short, you probably want to take some profits. If you want to go long, I would wait more until it got up through the T-line. The reason for that is, notice how effective the T-line has been for keeping this in a downtrend for a while. BIIB, another one, you have to see it open positive to go long. You can notice how you're starting to support right here on the 200-day moving average, and your stochastics are starting to move up. So you definitely need to see it open positive to break out. Abercrombie Fitch, gap up, you're probably going to be in a 45-degree from here. This is another one that if it opens positive, use probably the bottom of today's doji as your stop. It shouldn't come back down through there. UVXY. ProShares for the VIX. All right. Well, as you can see, this is not a very volatile instrument. You're basically sideways. It needs to break out not only through the 50, but through this upper channel before you really want to get excited about it. And the Russell 2000, still in a downtrend just like the NASDAQ. Doji down here, if it opens positive, you could get a bounce back up to the T-line, but the T-line needs to be breached before you really want to go real heavy. TLT, the 20-year notes are still up here at the high end, which means interest rates are still going to remain relatively low. And I would continue to hold those as long as they stay above the T-line. Just there's not too much more room for the rates to go any lower. Silver, caught in between the T-line and the 50, moving sideways. Yeah, I haven't been real impressed with those. The SPY, same as the S&P, down until you see a positive signal. We did Netflix, we did Ross Stores, we did Netflix, and Taylor is still in a downtrend. Had that one bounce, but it came right back down through the T-line. So observe the obvious. You're in a downtrend. Where do you think you're going to go to? Eventually, probably end up here at the 200-day moving average. Bidu, stay short until you see a buy signal. Another one that if it opens lower, you could have a doji sandwich set up. You want to short it immediately. Exxon, stay short until you see a buy signal. NSC, stay short. Again, that doji gap down, nothing has changed. You stay short until you see a buy signal. Let's see, ELOQ. This one, if it opens lower, they're still taking it down. That just tells you when they gapped it up from here today, there's still bears there. They're still willing to take this one down. Bank of America. Another one that you want to stay short ever since the gap down below the T line. If they open this and take it down, they're basically coming down through this support level, which means they're taking it back to the 200. EXK. There's that doji sandwich. Stay short until you see a buy signal. Ford. Same scenario. That could possibly have a doji sandwich also if it opens weaker tomorrow. That means you definitely want to be out of it if you're a short-term trader with it. Goog. Stay short until you see a buy signal. Okay. I just saw the whole S&P fly by. Okay, that's right. A few off the pink sheets. Large size of LEN, PHM. Yeah, that's not, let's see, LEN. LEN still looks to me like a potential doji sandwich, not quite in the oversold area yet. And is this Poldy Homes? Whoops. S.HM. Another one, yes. If it opens lower tomorrow, you definitely want to be shorting it. DDD. This one you stay short. There's that double doji on the bearish side. Evening star signal. Doji, doji. It meant they weren't taking it up with any force, and they couldn't get up through the T line. I'm suspecting you probably want to be watching the 200. HD. This one, another doji sandwich potential to the downside. It just needs to break the 50 to do anything major. And Slumberger, bottoming down here, but you need to see some strength bouncing off of this level. Are the strongest three patterns kicker, flutter kicker, and doji sandwich? I have just done up a video on probably about the 12 strongest signals and patterns put into a quantitative order, not necessarily that one is truly stronger than the other, but I try to put it in some order. And yes, those three are all on the strong signals. Not necessarily in that order, but pretty much. Can you buy Ross Stores on a positive open? Yes, you just have to make sure it eventually gets through the 50. If the 50 fails, you want to be right back out of it. But notice where people panic sell. They panic sell at the bottom when they gap it down in the oversold area and then do a signal, which is this in the case of hammer signal. That's usually a good indication that the bears have finally exhausted. When do options expire? I think on, what is today? Did they expire today? Oh, tomorrow. Yes, today is Thursday. Yeah, they expire tomorrow. All right. I'm sorry to keep everybody overtime. No, doji sandwich are two different things. Left-right combo is a doji followed by a bullish engulfing signal. A doji sandwich, what was our doji sandwiches? A doji sandwich is a, let's say on a bullish side, a strong candle, a doji, and then another strong candle opening positive after the doji. Do you look for certain patterns too? Head and shoulders, double bottoms, tops? Yeah, they're there. I mean, they're plain to see. I don't look for them. I just identify them if I see something setting up. Let's see if we can find Yeah, doji sandwich be this with a doji, and then if they open it lower, that this candle would be the same magnitude as that candle. Okay. All right. Hope everybody has a good evening. We'll see you all in the chat room.